Hey, this is Justin with daytradethemarkets.com and wanted to talk about two concepts today. I've got today's January 8th. I mean, these concepts would apply no matter when you're watching this, but wanted to talk about two concepts. How do you handle a gap opening, and then talk about the sweet spot trade idea, which is one of my favorite. This is the first half of the day or so today in the Emini S&P, and you can see that we opened around 36, but that was quite a bit of gap higher, if you will. You can see here's the close of yesterday, and then here is yesterday's high, depending on how you like to look at gaps. But in essence, that's giving us a pretty sizable buying gap to open the day. And so I know a lot of people like to look at gaps and have a gap strategy. So and the big question is whether the gap is going to fill or if it's going to be a so-called runaway gap, if you will. And so the strategy that I think makes the most sense and that we typically look at when we think about gaps is we want to see, is this thing likely to fill? And before you just blindly assume a gap fill, I would want to wait for some selling evidence to come in, and that's not what we had. Instead, we had this level 2 or strong buying aggression bar, tested the low of it, and then broke higher. It's a pretty good indication this is, could be a breakaway type of a gap. Now, that really came to fruition when we tested the overnight high, which is this green line. Let me bring this down a bit, make it a little bit bigger here. We tested this green dotted line here, which is the overnight high, and you can see when we took out that overnight high, we did so on this level 3, or what we call extreme buying aggression bar. And whenever we have a level 3 buying aggression bar on the high of the day, or a level 3 selling aggression bar on the low of the day, it's typically, and this is a very high percentage of the time, the beginning of a nice vertical move or capitulation and the end of the road. Okay, and so in this case, we want to know, basically, are we going to get some follow through above the high of this bar, and or will the low hold? Okay, and in this case, not only did we get follow through, but the very next bar was also a level 3 buying aggression bar. So that's telling us there is a lot of buying here. It happens to be in a location, the overnight high, that we would want to see how the market reacts, and it's after a pretty sizable buying gap. So all signs at this point are pointing to this thing wanting to move higher. Okay, and so one of the trades that I personally like is what we call the sweet spot, where when you have two of these level 3 bars in a row, it's telling you there's a lot of aggressive buyers that have come into the market. In other words, it's probably a pretty legit, it's not going to work 100% of the time, but a very high percentage of the time, this is going to be a nice trade. And the sweet spot idea is you can see where these two bars overlap right in here. Getting long somewhere in that area is certainly a pretty high opportunity type trade, or a high edge trade. Okay, and so you can see that happened again. Now we got another opportunity in here. This one is not, to me, is not as good. We'd already moved 30 points. I don't like to put parameters on the market. It can go as high as it wants or as low as it wants, but it has had a sizable vertical move, and more importantly, this 2050 area is late Friday is where the selling really came in. So that's a potential area of resistance, and you can see we did have a little bit of a battle there. This is a little bit of a different type of a pattern, if you will. We got the really strong buying. So if you were blindly trading the sweet spot, it certainly would have worked out nicely. But in this case, I would have advised some caution, because it was right against potential resistance and some selling was starting to come in. Now, we never did take out the low of this buying wave, and then these selling bars got rejected and we moved again higher. But that's just something to kind of differentiate between this one, which is really kind of a premier type of a setup, and this one, which certainly worked out, but maybe was a little bit lower edge, if you will. So again, just wanted to go over the gap strategy in terms of waiting for some evidence that if a buying gap is going to fill, wait for some selling evidence to come in before you just blindly assume a gap fill, and also wait for some good buying before you blindly assume a runaway type of a gap. And in this case, you could even put more stock into this, what we call sweet spot trades. So hopefully that makes sense. Let us know if you have any questions on that, and we'll talk soon.